niyo na ako?
Hello.
Afternoon, sir.
Yan.
Yes,
Yan.
sir.
Magandang hapon sa inyo, guys. So, good afternoon, FMB. So, wait na ang natin yung iba yung classmates. So, we will start at exactly 1:05 for our discussion for today. So, wait lang natin sila, guys. Baka umiinom pa ng tubig. Okay, sige, start na tayo. Okay, clear ba yung boses ko, guys?
Opo.
Yes po.
Nakakamiss mag-discuss. Okay, so, nakikita niyo na rin yung screen ko?
Yes po.
Yes po.
Okay, so thank you to those who confirmed. Ano ba? so let's start. Again, good afternoon, FMB, and then welcome to the midterm period topics. No? So after 8 weeks of discussing the prelim period topics, no, or prelim topics, so now we are already in the discussion of the midterm period topic. So, okay, so, but before we proceed, let's just have a recap with regards to our virtual agreement, no? So, first one is common time. Of course, let's respect each other's time, especially din sa mga maagang pumapasok sa Google Meet. Second one is make your voice be heard. So, in case na you have something to say or you want something to say, just let me know. Just key in one on our Google Meet chat, no? Yon. So, anything na gusto niyo itanong or gusto niyo i-comment or gusto niyo sabihin, just let me know. The third one is when you can turn on your camera. So, most especially kapag magre-recite kayo so that ma-recognize ko din naman yung mga itsura ninyo. And the fourth one is embrace the tech. So, I'm not sure if everyone has already adjusted with the new normal of virtual learning, but this fourth agreement is really one of a key indicator of a success virtual setup. And then last one is collaborate. So, as mentioned during the prelim period, I want to have a collaborative type of discussion wherein nagsasalita din kayo and we challenge each other's idea. So, going back or for the part 2, no, for the midterm period topics, so it is divided into 3 major parts. So the first part is about the cash conversion cycle, wherein we will be discussing about the operating cycle as well and how we can compute the cash conversion cycle and what is the implication of this cash conversion cycle in the operations of the business. The second part is investments. It is divided into two major parts. It is the investment on long-term assets, more specifically with the capital budgeting. And then the second one is the investment on securities. And then the third major part for the midterm period is the financial structuring, wherein we will be discussing about the debt and equity financing on how the firm is getting its funds in order to finance the assets of the business. So let's proceed with the first major topic for the midterm period, which is the cash conversion cycle. But before we proceed with the cash conversion cycle, we must firstly know what is operating cycle is all about. So the operating cycle is the average period of time required for a business to make an initial outlay of cash to produce goods, sell these goods, and receive cash from customers in exchange for the goods. So basically, the operating cycle tells us that how firm or how long the firm is taking in order to sell its inventories, and then how long the company is converting its accounts receivable into cash. The operating cycle is also known as the cash-to-cash cycle, and the formula for computing the operating cycle is the day sales inventory plus day sales outstanding. So in computing the operating cycle, it is a very straightforward computation. We will just be adding the two indicators in computing the operating cycle, which is the day sales inventory and then the day sales outstanding. The day sales inventory is also called as the inventory conversion period, wherein this is the number of days wherein the inventory was produced and then it was sold um, to the customers. On the other part of the second indicator of the operating cycle, which is the day sales outstanding, this is how long the firm is able to collect cash from the receivables coming from the sales of inventory. So yun yung ano niya, yun yung pinagkaiba niya. So si day sales inventory, more of to the kung gaano kabilis ibenta ni company yung kanilang products. And then si day sales outstanding naman is gaano kabilis mangolekta si isang company na nagre-result uh, dun sa sale of inventories niya dun sa customers. So, syempre, when we are talking about day sales outstanding, as mentioned during our prelim discussion, ang ini-indicate niya is gaano katagal nare-realize ni company yung accounts receivable niya coming from the sales of inventories. So let's have an illustration for the operating cycle. So VW Incorporated buys merchandise and expects to sell the goods and convert them into accounts receivable in 60 days. It should take another 40 days to collect the receivables. So what is the firm's operating cycle, or what is the firm's cash-to-cash cycle? Alright, meron tayo dito sa comment box. So it's 100 days. So paano natin kinumpute yon? So we just take, let's analyze the situation of VW Incorporated. So sabi, si VW Incorporated daw, bumili ng merchandise. And they are expecting na mabebenta nila yung goods na yon and convert them to accounts receivable in 60 days. So yung day sales inventory ni VW Incorporated in this scenario is 60 days. And then next is it should take another 40 days to collect the receivable. So after daw ng sales ni VW Incorporated, which is after 60 days of producing the inventory, it should take another 40 days to collect the receivables. Ibig sabihin, 40 days pa bago niya ma-convert into cash or bago niya ma-receive yung cash coming from the sale on the 60th day of the inventory. So the firm's operating cycle is 100 days because 60 plus 40 is 100 days. So tama yung mga sumagot sa comment box. Question for operating cycle?
Wala po.
Wala na po.
Okay, wala. So very straightforward, no? So now that we have already identified the operating cycle of VW Incorporated or of the firm, now we will be assessing the cash conversion cycle of a company. So the cash conversion cycle is defined as the length of time funds are tied up in working capital or the length of time between paying for working capital and collecting cash from the sale of the working capital. So, in terms of cash conversion cycle naman, it is included in the cash conversion cycle. First is the operating cycle, which was discussed a while ago. But when we are calculating the cash conversion cycle, we are also considering how long the company defers the payment. No? Kumbaga, kung gaano niya katagal binayaran yung suppliers niya in terms of raw materials, merchandise that is used in the sale of inventories. So yun yung sa cash conversion cycle. So the formula for the cash conversion cycle is the operating cycle or the day sales outstanding plus day sales inventory minus days payable outstanding. Yan. So, yan. So as mentioned a while ago, the components for the cash conversion cycle is three. It's divided into three. So that's day sales inventory, day sales outstanding, and the days payable outstanding. Or ito yung kung gaano katagal or kung ilang araw bago magbayad si isang company dun sa kanyang supplier in terms of raw materials, merchandise na ginagamit for the sale of inventories or for the sale of goods or products na binibenta ni company. So, let's have an example. Let's have a continuation of the example for the VW Incorporated. So, they buy merchandise and expect to sell the goods and convert them to accounts receivable in 60 days. And then it should take another 40 days to collect the receivables. However, there is an underlying note here that the VW Incorporated is able to defer its own payment to its supplier for 30 days. So what is the firm's cash conversion cycle?
70 po.
Yan.
70 days po.
Okay, so that's correct. No? The cash conversion cycle of VW Incorporated is 70 days. Yan. So, paano nakuha yon? So, that's 60 plus 40, that's equals to 100 days, minus 30 days, so that's 70 days. Yan. So, the cash conversion cycle is used, or it is a very useful tool for estimating the amount of working capital that a company will need in order to maintain or grow its business. So, ano ba yung working capital na tinatawag natin? What are the components of a working capital?
Current asset.
Current liability.
Okay,
Current
so we
asset.
have current assets, current liabilities, what yung iba? Current asset minus current liabilities. So what is the firm's working capital, no? Okay, so the working capital of the company is said to be the current assets of the company. So yeah. So tama si Tin. Any questions for the cash conversion cycle?
Wala po.
None.
Okay. None. Okay.
Wala
Very good.
po.
Okay, sige. Okay, so now, before we proceed with the discussion, you go to ahaslides.com and then let's have a very quick activity, no? So, the day sales inventory, ito yung inventory conversion period, no? Ng isang company. The day sales outstanding is the average collection period. From the sale of inventory, this is the average collection period. And then the days payable outstanding, ito naman yung deferment period or your average deferment period ng isang company. So you go to a slide. And then you go the code for us guys, use your phones to join. Yan. The code is 671C6. Yan, so wait ako until 1:23 para makapag-join kayo sa ating mini activity for today. Yan, so may mga nakikita na ako dito si R. Sino si R? Once na makapasok na kayo guys, wag na kayong mag-alt tab or wag na kayong umalis kasi baka mawala kayo dun sa activity. Yan. And then make sure to use a cellphone in participating sa AHA slides kasi parang hindi siya gumagana kapag ka-laptop or desktop yung gamit niya. Sino si Cheng? Sino si R? Si AB? Sino si AB? Si Dedyos ba to? Abi?
Ako, sir. Ako po, sir.
Ayan, sabi niya. Yan. Sige, enter lang kayo guys. 1 minute pa bago tayo mag-start.
Parang bagay.
Jasmine Ganda, dito na din. Kent Pogi. Sinong Kent to? Si Kerwin o si Aragoncillo? Si Kent siguro to Aragoncillo.
Sir, present.
Kasi curse yung pangalan ni Kerwin. Yan, pasok lang kayo guys. 33 players pa lang tayo. Currently. Okay, so let's start. 33 lang yung nag-join. Uy, Casjul. Sino si Casjul? Wait lang.
Kami,
Sige,
sir.
125. Start na tayo. Si Cassandra?
Apo, sir. Tabi, di
Kasi
Julia.
Julia,
Kasama si
agad
Julia,
eh.
sir.
Saka yung kambal niya, sir.
Who?
Oh, kilala mo
Hindi
naman
ako
na.
makapasok, sir. AHA slides, guys. AHA slides. .com. Hindi makapasok daw si Kier.
Sir, nawala. Wait lang.
Okay, go.
Ako din,
Okay,
sir. Hindi ako makapasok.
Refresh nyo lang, guys, kapag hindi kayo makapasok. Gamit kayo phone. Tapos, parang dapat Chrome yata para mas mabilis. Yan sabi ni Maridel, katok daw kayo. Matawa kayo, guys. Joke yan.
Oh, hindi naman.
Corny daw.
Ano, Ken?
Hindi mo, kuya ko nag-joke. O, nyo talaga, kuya.
Corny daw sabi ni Kier. Ako din di mapasok sabi ni Bern.
Sir, nawala yung Chrome.
Ha? Yan, refresh nyo lang guys, tapos habol na lang yung iba. Huwag kayo mag-alala guys, super simple, lang to, activity. Game. Mag-start ka na guys, ha?
Sir, pengen ako sir ng link.
Ahaslides.com nga, kanina ko pa binibigay dun sa Google Meet, hindi kaya.
Di sir, ano,
Code
hindi ko
ba?
makita dito sir eh.
Code?
Anong code?
671C6.
Iba yata yung akin sir. Tignan mo. Lalagay ko sa print screen ko sa far.
Sige. 671C6 yung
Yan o.
code.
Check mo sir.
Teka.
Ganyan yung akin o.
Hindi, huwag ka mag-present. Ahaslides.com, huwag ka mag-join. Kasi gumawa ka ng account eh.
Ano gagawin ko?
Hindi ka nagagawa ng account. Balik ka sa ahaslides.com. Ito. ahaslides.com /671. Yan, pasok kayo dyan guys. Sinan ko Ana Divina sa natin sa group chat natin sa Messenger.
Dun pala yung
Ano na lumalabas sa'yo? Ano, Lancer? Wag yun. Game na. Ano na, masyado na tayo nagtagal dito. Okay, so start na tayo, guys. So, good luck. Balik na kayo dito. Refresh nyo kasi baka mawala kayo dito, ha.
Sir, ayaw.
Bakit, ano lumalabas?
Ayaw sa akin ni Gan. Joke.
Wala kayo dyan. Again, in-start ko na, guys. So, check nyo na lang yung, yung screen nyo. Kung hindi kayo maka-join, so, tignan nyo na lang yung, yung sa screen natin sa Google Meet. Yan. So, compute for the operating cycle. Ano sagot niyo, guys? Okay, so 6 lang yung tumama. The correct answer is 30 days. Okay, next. Yan, compute for the operating cycle pa din. Sagot, guys. Okay, so 29 tumama, 75 days. Number na lang ilagay nyo, guys. Huwag nyo nalagyan ng days para hindi kayo mahirapan. Yan. So, next is compute for the cash conversion cycle. Grabe, yung bilis ng iba, oh. So, what's the answer, guys? It's 100 days. Okay. So, next. Again, compute for the cash conversion cycle. Sagot na, guys. Okay, so dumadami na yung tumatama, 60 days. Fifth question. Okay, so compute for the operating cycle. Okay, so 110 days, 23 got it right. Sana ganyan exam. Sabi ni Sis, no? Okay, so compute for the cash conversion cycle, guys. Ganun din exam, Sis, na may timer din. 20 seconds per question. Ayan, so, what's the correct answer? Ayan, 87 days. Yung iba 97, yung iba 77. Next. Again, compute for the cash conversion cycle. Lumabas sa akin, sir. Refresh mo lang, Kier. Okay, oh, yan daming nagkamali. So the correct answer is 40 days. 110 days. Baliktad yung DPO tsaka DSO, guys. Okay, 8th question. Sabi ni Joanna. Nasanay kayo, no? Anong sagot niyo dito, guys? Operating cycle. That's 50 days. Half-half, ah. Okay, 9th question. What is the cash conversion cycle for this one? Salita na ako, sabi ni Joanna. Consider the cash conversion cycle. Siyempre dapat may twist after nung fifth question. So yung mga hindi nakakonect, guys, computin nyo na lang sa sarili ninyo dyan. Okay, so the correct answer is 70 days. So that's correct. Last question. And what is the average collection period? So what is the average collection period for this one? It's 15 days, no? 15 days, why? Kasi yung day sales outstanding. Day sales outstanding, it is also called as the average collection period. So that's why 15 days ang tamang sagot. Day sales inventory is the inventory conversion period. The days payable outstanding is the deferment period. And then the day sales outstanding is the average collection period. Okay, so let's see kung sino yung top scorer natin for this one. Congratulations! Si Rezel ang ating top scorer. Yan, 797 points. Yan. So sino si AJ? Sino yung AJ, guys? Ayan, si Andre. Next, si Ira. Fourth, si Bern. 5, si Tin. Tin Andrade ba to?
Yes, sir.
Sino si R? Sino si R? Ayan, si Roda. 6. 7, si Nelwin. 8, si Abby. 9, si Sisi. Sino si Sisi? Si Sisno. Okay. And then 10, si J. Kent. And so on and so forth. Yan. Si John, si Kent, si JR. Yan. So, yan guys. Yun lang for our activity, mini activity. I'm happy. Okay. So, let's go back with our discussion of cash conversion cycle. So, now you have, you already know, walang plus, already, i-consider ko siya sa, sa class performance, no? Yung activity na yon. But, kasi hindi nakaka-join yung iba, so, yun nga, mini activity siya. Pero i-consider natin yun, don't worry. CP daw red. Okay. Battle pass, sabi ni Ira. Okay, so now that you already know the basic of cash conversion cycle, salamat lang sa lahat. Now let's discuss the cash conversion cycle, which we will be calculating from the financial statement. So syempre sa reality, financial statement naman talaga yung ihaharap sa inyo when you are already a financial analyst, no? And for us to calculate the cash conversion cycle from the financial statement, of course, you need some variables for you to know. So let's take a look with the different component of the cash conversion cycle. So let's have first the day sales inventory. So as mentioned a while ago, the day sales inventory is the inventory conversion period, wherein it is the average time required to convert the raw materials into the finished goods, and then you sell them. So the formula for the DSI or the day sales inventory is inventory over cost of goods sold per day. Yan. So that is your formula. So let's have a specific example for this one. Ano yung example ko kanina? Wala. Okay, so dito na ito. Ay. So assuming that the company on its annual report or annual financial statement, ang inventory niya is amounting to 350,000 pesos. And then the cost of goods sold, the annual cost of goods sold of that company is 1 million pesos. Oops. So now we are asked, as a financial analyst, we are asked to compute for the day sales inventory using the formula. So how much is, what is the number of days of the day sales inventory of this company? I'm using these figures. Sige nga, try nyo nga i-compute, guys. Okay, so we have 35 days, 36 days, 35 days. So let's compute. Kung tama yung inyong sagot. No? Actually, wala pang tumatama. Okay, so ayan, si Tin, Andre, 128 days. Joanna, 3,500. Kelvin, 128. Okay, so let's compute, no? Times 100, sabi ni Joanna. Okay, so let's compute for this one, for the day sales inventory. So the formula is inventory over cost of goods sold per day. Yun yung formula. So for us, before we proceed with the main calculation, let's have first compute the cost of goods sold per day. So we have here cost of goods sold, which is coming from, or which came from the income statement or the statement of income of the corporation, amounting to 1 million pesos. So for us to know the cost of goods sold per day, we have to divide the 1 million pesos over 365 days, because 365 days ang isang taon if it is a regular year, but if it's a leap year, 366 days yung gagamitin natin. So for this one, we will be using 365 days. So that's 1 million pesos divided by 365. You will get 2,739.73 pesos. So this is your cost of goods sold per day. So now that you already have your cost of goods sold per day, you can now compute for the DSI of this company. So 350,000 divided by 2,739.73. So that's 100 128 days. Yan. So, 127 siya. 127 siya. 0.75 kasi, di ba? Pero pag ang sabi kasi natin is that regardless of kung gaano kalaki yung point something niya and we are pertaining into days, automatically plus 1 tayo sa final answer. Yan. So, na-compute ba to guys? 128 days?
Yes, sir.
35 pa kayo. Ayan, dahil pa nag-35, no? Ayan. Okay. So, let's close this one. So, we are already done with the day sales inventory computation. So, now let's have the day sales outstanding. So, itong day sales outstanding is already familiar na kayo kasi before we already discussed this one. So again, the day sales outstanding is the average collection period. And this is also the average time that receivables remain outstanding before they are collected. So the formula for the DSO is receivables over average sales per day. So let's have again another specific example. Yan. So, compute for the DSO or the day sales outstanding. Okay, si Tin, 68 days. Andre, 68. Polmo, 68. Bern, 68. Roda, 68. Andre, days. Kahabol yung days. Luis, 68. Jessica, 68. Daryl, 68. Kai, 68. Melvin, 68. Maridel, 68. Eloisa, 68 with the question mark. Joanna, 68. Jom, 68. Sisno, 68. Reggie, 68. Okay, so let's compute. So first, let's compute first the average sales, no, of the company. So that 1,350 or 1,350,000 pesos divided by 365. So you will get your average sales amounting to 3,698 pesos and 63 centavos. So now you can already compute with the DSO. So that's accounts receivable 250,000 pesos divided by your average sales. So 67 point. Yan, 67.59. So lagi tayong plus 1. So the DSO for this specific example is 68 days. Yan. Okay, so next. So we are already done with the two components in calculating the cash conversion cycle. So now let's proceed with the last one. So the days payable outstanding it is the average length of time between the purchase of materials and labor and then the payment for them. So the formula for the DSO is payables over cost of goods sold per day. So again, let's have an example or a specific example for this one. Yeah. So you have accounts payable for 500,000 pesos and then the cost of goods sold amounting to 1.5 million pesos. So how many days is the length of time between the purchase of materials and labor and the payment for them? What is the DPO of this specific example? Yan, ang dami na nakasagot. Alright, so that's 122 days. That's correct, guys. So again, let's compute for the average CGS. So that's 1.5 million over 365. And then there you will get this amount. And then now you can already compute for the DPO. So that's 500,000 pesos divided by average cost of goods sold. So that's 121.667. So that's 122 days. Correct yung mga sagot na guys. Any questions for this one?
Sir,
Yes.
day sales outstanding po ba yun kapag payable? Yung last na tinapik po natin.
Days payable outstanding.
Kasi DSO po kasi nakalagay.
DPO. Sorry.
DPO. Sige po.
Mistype. Yan. Thank you, Nelwin,
Opo.
for noticing. Ba't di napansin ng FMA yun? Oo lang siguro na oo kabila. Ayan, so DPO yung days payables outstanding. So no question. Okay. So let's have an example, no? For the computation of the cash conversion cycle, because you already know the basic of the computation of the cash conversion cycle, and you already know how to compute, which is coming from the financial statements, no? So now let's have this example. So this is the following data taken from the VW Incorporated financial statements. So compute for the cash conversion cycle. Yan. So 150 ngayon. So 155, computein nyo yan. Tapos babalikan ko kayo guys. Basta guys. Sagot na kayo? Yeah, 1 minute pa guys. Excited. Okay, park nyo lang guys yung sagot nyo dyan. Magtalo kayo kung ano talaga. 188 o 189. Okay, so let's have it. Let's compute. So how many days did you get for the day sales inventory?
219.
219?
220. 220 po.
219.
219, sir.
219, sir.
219? So day sales inventory, so 825,000 divide. How much is the cost of goods sold per day?
3,767.12.
Okay. So the DSI for VW Incorporated is 219 point so much, no? So, 'di ba sabi natin kapag ka sa days kapag ka ang sagot nyo sa calculator is merong point regardless kung round down siya or round up sa mathematical theory, no? It will always be +1 for the days para dun sa mga sagot nyo kapag ka days yung yung sagot. So for this one, the DSI is 220 days. So for the DSO, how many days did you get?
96. 96 po.
96.
How much is your average sales per day?
9.
9589.04.
0.04.
Okay. So, and then you will get 95.42, 95 point so much decimal, no? So that's 96 days for the day sales outstanding. Okay, lastly, for the days payable outstanding or the DPO, so again, the cost of goods sold average is 3767.12. So if you will compute it for 75,000, divide 3767.12, you will get 126 point so much, and that is 127 days. So, but 365 sa akin, sabi ni Maridel. So baka plinas mo lahat, Maridel, yung DSI, DSO, and DPO. So yon, so the cash conversion cycle is 189 days. So yon, tama yung mga sumagot ng 189. And yung mga 188, for sure, ano lang, nalito lang dun sa DSI, no? Yan. So yan, 189 days yung sagot. Any questions, guys, for the cash conversion cycle?
Opo.
Nasa DPO na ako, sabi ni May. Wala. Okay, thank you.
Sa patingin nga nung sagot.
Sir,
Sagot lang po.
Ito. So ito yung average. Average. Ito CGS. Ito sales. Ito din CGS. All good, all good.
yes po.
All good
Kaya pa,
po.
kaya pa.
Kaya pa.
Okay.
Joanna.
Basta, pagka may point kahit 0-0, automatic +1 na po yun, di ba?
Apo, kapag ka-days.
Thank you po. Sinishare ko lang
Thank
pag
you.
small.
Yes, tama yun. Alright, so let's proceed. Yan, so yun na yun guys, yun na yung ano natin, topic natin for the first part of the midterm period, which is the cash conversion cycle. Yan, so now we will proceed for the second part or the second topic, second major topic for financial analysis and reporting. So this is investment on long-term assets, which we will be discussing is all about capital budgeting. Okay, so for this topic, we will explain why there is a need in capital budgeting. So we will estimate the cost of different capital components, which we have four, or actually we have three, no? We have the capital component, the debt, the preferred stock, and the common stock plus the retained earnings. So after we estimate the cost, we will be combining that different component costs to determine the firm's cost of capital. So in investment on long-term assets, we will be more focusing on the cost of capital, or how much or what is the percentage of a specific peso or of a specific currency in terms of investments. Yan. So these concepts are necessary to understand the firm's capital budgeting process. So let's have first the weighted average cost of capital, or this is the WACC. So the WACC is a calculation of a firm's cost of capital in which each category of capital is proportionately weighted. So the components or the capital components for the computation of WACC is common stock. This is the common equity plus the retained earnings, the preferred stock, and the last one is the interest-bearing debt. These three is also called So these three, the common stock, preferred stock, and the interest-bearing debt is also called as the investor-supplied capital. So, next slide. So let's have the basic definitions for the WACC. So first term is the capital component. So this is the one of the types of capital used by firms to raise funds. So yun nga, as mentioned a while ago, the three capital components are the common stock, the preferred stock, and the interest-bearing debt. The next term or the next term to define is the component cost. So this is the cost of each component, or the cost of debt, the cost of preferred stock, and the cost of equity. So these are then combined to form a WACC, which is used in the firm's capital budgeting analysis. Okay, so before we proceed with this one, let's take a look. Yan. So let's have a look again with the Allied Food Products capital structure. Yan. So this is the Allied Food Products capital structure used to calculate the WACC. So these are the assets and claims of Allied Food Products during 2018. So again, itong mga assets is coming from the statement of financial position of Allied Food Products. So inas-is ko lang naman yun, wala akong binago dito sa balance sheet nila. And then the claims or the liabilities and equity, yan, inano ko lang din, nilagay ko lang din siya as a claim dito sa right side of the balance sheet of Allied Food Products. And then after that, I did a vertical analysis for the claims lang. Yan. So I did a vertical analysis here. And then for this part or for this section, we will identify the investor-supplied capital of Allied Food Products. So first one, first component of the investor-supplied capital is the interest-bearing debt. So accounts payable. So accounts payable is not an investor-supplied capital because accounts payable is derived from the operations of the business, in financing the operations of the business, as well as the accruals. The notes payable here is an investor-supplied capital because this is a borrowing to finance the long-term asset of the Allied Food Products. Might as well with the long-term debt, which is denoted into bonds. So these are also investor-supplied capital. Hence, the total liabilities or the total debt for investor-supplied capital for Allied Food Products is amounting to 860, which I know we have discussed already during the discussion of financial ratios. And then after that, we will getting the book value of the common stock and the retained earnings, which was also came from the financial statements of Allied Food Products. So inas-is ko lang to, guys. Yeah. And then you will get the total common equity for Allied Food Products. And then as you can see, beside the amounts of the book value of the Allied Food Products, I did a vertical analysis, no, in terms of liability to total liability and equity ratio of Allied Food Products. So that's 860 over 1/8, tsaka 940 over 1/8. So now that you already have the book value for Allied Food Products, then you will be you should know the market value. You have to compute the market value of the investor supplied capital of the Allied Food Products. So again, the notes payable here is an investor supplied capital, hence 110 then. And then we also have a note below below the assets and claims against the Allied Food Products, the number one here is stating that the market value calculations assume that the company's debt is trading at par. So the market value of debt is equal to the book value of debt. So meaning that the market value is trading at par, ibig sabihin 1:1. So kung ano yung amount mo with the book value, yun din yung amount mo with the market value. So yun yung sinabi niya for debt. Kaya kung makikita nyo dito, for the notes payable, the market value of notes payable here is 110 as well. And then the market value of long-term debt here is also 750. Now, you will see or you will notice that the total common equity market value is different from the book value discussed a while ago. So why? Where does the $1,153 dollars came from? So if you will take a note, or if you will take a look on the note, on the number 2 note, the market value of equity is the share price of common stock multiplied by the number of shares outstanding. So if you will remember, or if you will recall, the share of price, the share price of the common stock of Allied Food Products during 2018, the amount is 23.06 per share during 2018. Ito siya. Now that you have the common stock price of 23.06, you need to multiply that with the common shares outstanding of the Allied Food Products. Wherein, in this example, the number of shares outstanding is 50 million shares. So to compute, that's 23.06 times 50 million. So that's 1,153 in millions for the market value of the equity. And then after that, I did a vertical analysis comparing the total liabilities versus the total liabilities and equity, as well as the total common equity versus the total liabilities and equity. And then last note we have here is the target capital structure. So this is a mixture of debt, preferred stock, and common equity the firm plans to raise to fund its future projects. So the target here is actually derived from the financial forecasting of the Allied Food Products. So we will not be more onto the detail regarding the financial forecasting, because the financial forecasting is a separate topic for financial management. But these targets here, these targets from the investor supplied capital is the target that the Allied Food Product is planning to raise fund in its future projects or in the next year project. So these are all given, no? Because it is derived from the financial forecasting of Allied Food Products. So yan, ito na yung gagamitin natin data in calculating the WACC. Actually, ang nagagamit ng dito is ito, the target. Kasi yan yung parang pinaka-implications when we discuss later the computation of the WACC. Okay, so let's go back with the slides. So now we have different symbols that identifies the cost and weight of capital components. The first one is we have the R sub D. So the R sub D is the interest rate on the firm's new debt. This is also called as the before tax component cost of debt. So the R sub D here is the interest rate, just the interest rate of the firm's new debt. So for example, there is a there is an assumption, or there is the analyst analyzed that the interest rate for new debt for next year is set to be 10%. And then the interest rate on the firm's new debt is set to be 10%. So yun lang siya. Hindi na natin siya kukumputin into the more detailed, because we are more after with the second symbol to identify the cost and weight of capital component, which is the R sub D times the open and close parenthesis 1 minus capital letter T. So this symbol is called the after-tax component cost of debt, where the capital letter T is the firm's marginal tax rate. So this is the debt cost used to calculate the WACC. So yung R sub D times 1 minus T, yan po yung cost of debt. So tatandaan niyo yun, guys, ha. Cost of debt po ang R sub D times 1 minus T. The R sub P is the component cost of preferred stock. This is the yield the investors expect to earn on the preferred stock. So, when an investor invests, of course, they are expecting for a yield, or they are expecting for a return. So, the rate of return that the investor is expecting on the preferred stock, this is the component cost of the preferred stock in the company's perspective. The first symbol here is the R sub S. So that's the component cost of common equity raised by retained earnings or internal equity. So the R sub S is the yield or the rate of return that the investor is expecting to return internally in the company kapag ka-retained earnings or internal equity. The R sub E is the component cost of external equity. So kung kanina yung R sub S is a component cost of internal equity which is derived from the retained earnings, ito namang R sub E is a component cost of external equity which is derived from by issuing new stock. Yan. And then next is the three target weights. We have the W sub D, the W sub P, and then the W sub C. So these are the target weights of debt for the W sub D. W sub P is the target weights of preferred stock. And then the W sub C is the target weights of common equity, which includes the retained earnings. So if we will take a look with the allied food products, yung 45% here is already the W sub D, or the target weight for debt. The W sub P is the target weight for the preferred stock, which is 2% dito sa ating example. And then the W sub C, or the target weight for capital, or target weight for equity, is 53%. So ito yung gagamitin nating value for the target weight. And then the WACC is also called as the weighted average cost of capital. So this is the formula in computing the weighted average cost of capital. So we have WACC is equals to percentage of debt times after-tax cost of debt plus percentage of preferred stock times cost of preferred stock plus percentage of common equity times cost of common equity. So, para natin siya, i-convert natin siya into symbols which we discussed kanina, no? So, we will have here the W sub D times the R sub D times the 1 minus T plus the W sub P times R sub P plus the W sub C times R sub S. So, in calculating the weighted average cost of capital, dito lang tayo nagpa-focus. In computation of this, after-tax cost of debt, ito, the cost of preferred stock, ito, R sub P, and then the cost of common equity, or the R sub S. So we will not compute for the percentage of debt because these are given on the after the financial forecasting of the company. So the percentage of debt, the percentage of preferred stock, and the percentage of common equity. So let's take a look with the first component, no, of what we need to calculate for the WACC. So the cost of debt, or this is denoted as the R sub D times 1 minus T. So this is the interest rate a firm must pay on its new debt, is defined as the before tax cost of debt. Yun yung sinasabi natin R sub D kanina. And then the after tax of cost of debt, yun nga yung R sub D times 1 minus T, should be used to calculate the WACC. So the formula for this one is interest rate on new debt minus the tax savings. So in the cost of debt, or estimating the cost of debt, we use the after-tax cost of debt in calculating the WACC because we are much interested in maximizing the value of the firm stock. And then, di ba kapag inaalam natin, or we are gauging the maximization of the value of the firm stock, we are more interested in the net income. And then we all know that the net income is the after-tax income of the company. Kumbaga na minus na lahat ng expenses. So that's why in calculating the cost of debt, we will need to deduct the tax savings for the cost of debt. So let's take a look with the example of Allied Food Products. Okay, so dito tayo mag-focus, guys. Okay, so the cost of debt computation is interest rate on new debt minus tax savings. Now, as mentioned a while ago, the before tax cost of debt for Allied Food Products is set to be 10%. So kapag ka nangutang si Allied Food Products next year, 10% daw yung ipapatong ng lender sa kanya. So now, we need to compute for the after-tax cost of debt of Allied Food Products using the formula. So we have here the interest rate on new debt minus the tax savings. So the given na yung 10%, which is the estimated interest rate for the lender to be charged to the Allied Food Products, and then we also know the tax rate of Allied Food Products during 2018, and then this is set to be 40%, no? So given naman yung tax rate. So now, what is the after-tax cost of debt? Or this is the cost of debt for Allied Food Products. So that's 10% times 1 minus 0.40. So that's 10% times 0.60, and then you will get 6%. So the 6% here is the cost of debt for Allied Food Products. Nakuha po ba yon?
Yes po.
Question doon sa cost of debt?
Saan uli galing yung sir, interest rate?
Yan. So yung interest rate, the interest rate is an estimate, no, of the estimate of the analyst na isi-set ng analyst nila na kapag kaumutang si Allied Food Products next year, 10% yung ipapatong na interest rate ng mga magpapautang sa kanila. So this is given. And this is pure estimate, the R sub D. And then, after nun, you will get the tax savings. So that's 1 minus T. So we all know that the tax rate for Allied Food Products is 40%. which is also based in the income statement of Allied Food Products during 2018. Ito, 40%. So, to calculate, we will be multiplying the R sub D to the tax savings, no? So that's 10% times the 1 minus 0.40. So that's 10% times 0.60. So the answer for the cost of debt of Allied Food Products is 6%. All good? All good, guys? Okay. Thank you, Lizelle. How about the others? Clear?
Yes.
Okay. So, okay. So now that we know already the cost of debt, we can now already proceed with the cost of preferred stock, which we will be denoting R sub T. So the cost of preferred stock is the rate of return investors require on the firm's preferred stock. So yun yung sinasabi ko kanina. Kung gaano yung estimation ng mga investors dun sa rate of return nila sa investment nila, yun yung magiging cost of preferred stock with the company. So the computation for the cost of preferred stock is R sub P is equals to D sub P, or this is the dividend, preferred dividend, no, for preferred stock, and then over the P sub P, or which is the current price of, or which is the price of the preferred stock na isi-set nila. So if you will remember, during 2018 of the Allied Food Products, wala naman talaga siyang preferred stock, kaya zero yung preferred stock dito ni Allied Food Products. However, the target of Allied Food Products for the next year, nagkaroon sila ng set, or nagkaroon sila ng target, which is 2%, no, of the total liability and total common equity. That's why, Kelvin, may question ka po? Okay, so baka napindot lang. Ayan, so since the Allied Food Products does not have any preferred stock outstanding, but they are planning to issue some in the future, we need to calculate the cost of preferred stock. So let's have an example here using these figures. So assuming that the Allied Food Product is planning to issue preferred stock, and then the preferred stock will be sold 97.50 per share, and then when the investor invests sa preferred stock ni company, the company will pay 10 dividend per preferred share. So now, what is the cost of preferred stock using this calculation? Sige nga, try nyo nga, guys. What is the rate of the cost of preferred stock using this formula? And then you have given here ito.
10%, sir.
10% si Joms? Yung iba? 10%? Andre, 10.26? Andre, 10?
1.26.
Okay. So, let's see. Alright, so the cost of preferred stock is set to be 10.26%. So, siguro hindi lang yung mga 10%, no? Yon. So, 10.26% is the cost of preferred stock for Allied Food Products.
Pero invento mo lang yan, sir, yung given.
Hindi, based sa forecasting to ni Allied Food Products.
Saan yan nakikita, sir?
given. Ano siya given? Kasi ano siya, derived siya from the financial forecasting na ginagawa ng isang company. But kasi what we will be discussing is just an analysis of the WACC. So we will not be more on focusing to the financial forecasting because financial forecasting is a separate topic in financial management. So ano siya, more on kumbaga financial forecast ng financial statements ng isang company. So result ng kanilang operations and financial forecast. Yan. So hindi ko kayo pagko-computein guys ng nung parang pinaka mismong per share because itong dito sa preferred share, ito yung napagkasundoan nilang ibebenta nila into the public. So ito yung siguro during their annual meeting or annual discussion regarding their plans in capital budgeting, they set to have or to price it as 97.50 per share for the preferred stock, and then they will pay dividend $10 per share or per preferred share for the investors. Yan. Any questions pa guys for the cost of preferred stock? Princess, you have question? Any questions, guys? Okay, none? Okay. So now, let's proceed with the cost of equity, or this is divided into two, which is the cost of retained earnings, or the R sub S, or the cost of new common stock, or the R sub E. So the rate of return required by stockholders on a firm's common stock is called the cost of retained earnings. Kasi syempre, when we are talking about rate of return required by internal investors, so yung mga existing investors na, so that is the cost of retained earnings. While the cost of new common stock, this is the cost of external equity, which is based on the cost of retained earnings, but increased for flotation costs necessary to issue new common stock. So basically, the difference between the two is that the first one is a cost of internal equity, and then the other one is the cost of external equity because they will issue new common stock in financing its projects or in financing the future projects of the business. Oops, sorry. Okay, so as mentioned a while ago, there are two types in getting the cost of equity or the cost of internal or external equity. So first one, we have the cost of retained earnings, the R sub S, and then we will be using three different methods in computing the cost of retained earnings. The first one is the CAPM method, or also called as the capital asset pricing model method. So the CAPM method is the most widely used method for estimating the cost of common equity. So there are four major steps in getting the cost of retained earnings. So the first one is to estimate the risk-free rate, or the R sub capital RF. Generally speaking, the analysts use the 10-year treasury bond rate as the measure of risk-free rate. But some analysts also use short-term treasury bill rate. So, why do you think that the treasury bond rate is used to estimate the risk-free rate for this one? Ano bang meron si treasury bond? Why it is said to be a risk-free investment type, no? Or risk-free type of investment? Anyone? Anyone? Bakit? What makes treasury bond special? Why this type of investment is a risk-free investment?
Galing sa government.
Sino
Binabaka pa ng government.
Tin?
Dahil
Sino ba yun?
yung sa government, sir. Government security.
Okay. Government security, yes. Meiji, you are stating something?
Yun sir, binabaka pa ng government. Kaya parang less yung as in parang walang
Ayan, so that's correct, Tin and Meiji, so thank you. So the treasury bonds are risk-free investment or risk-free type of investment because these investments are backed up by the government. So once the company issue treasury bonds, sagot siya ni government kapag hindi nabayaran ni company. That's why the treasury bonds are risk-free type of investment. And for sure, 'di ba, kapag ka naka-back up kay government yung isang investment, malabo siyang malugi malabo siyang malugi or malabo siyang mag-default unless the country is experiencing or they are experiencing sovereign risk or the country risk wherein the company is or the nation rather is experiencing default risk of the company kung hindi or of the nation pala. So kung hindi na nakakabayad si bansa ng kanilang utang with the other countries, ganyan. So yun, medyo dun na nakakaroon ng risk in terms of the treasury bonds. But regardless with all else equal, with all remains constant, so the treasury bonds are risk-free type of investment. Yan. So the second one is the second step is to estimate the stock's beta coefficient. We will be denoting this one as the B sub I, and the I here is the index of the stock's risk or the beta coefficient. Familiar ba kayo with the beta coefficient? Or this is something new?
Coefficient
Hindi
lang,
po.
sir. Walang beta.
Okay. Okay. Ano daw? Sino yan sabi niya? Jom?
Sir, coefficient lang, walang beta.
Coefficient. Okay. So, the beta coefficient is actually a measure of sensitivity or correlation of a security. So, ginagamit itong beta coefficient in estimating or in estimates, in terms of securities, investments, kasi they are using or the company is using the beta coefficient to estimate yung scenario ng isang investment, if it is good investment or is it a high risk investment or a low risk investment. So yung mga ganon. So these are just a terminology used in finance that is used to measure sensitivity and correlation of a particular investment. The third is to estimate the market risk premium. So the market risk premium is RP sub M equals to R sub M minus R sub RF. So it's a market risk minus the risk-free rate, And then the market risk premium is used to also to estimate the cost of retained earnings. Okay? So, ito yung pinaka-definition ng formula ni CAPM approach. So, CAPM estimate of R sub S is equal to risk-free rate plus a risk premium that is equal to the risk premium on an average stock scaled up or down to reflect the particular stock's risk as measured by its beta coefficient. So, when we are calculating the CAPM or the cost of retained earnings using the CAPM approach, we are just gauging the risk-free rate plus the market premium risk rate of an investment. And then, of course, this is also measured by the beta coefficient. And then the beta coefficient is again set by the company itself. Yan. So the formula for this one is R sub RF plus RP sub M times the B sub I or the beta coefficient. So kapag ka hindi given si RP sub M, para ma-compute natin si CAPM approach, kapag ka given si R sub M, we can use the R sub M minus R sub RF to compute for the market premium risk of the company. Yan. So, one underlying factor in terms of computation of the cost of retained earnings is that more on purely estimate yung ginagamit na value for computation of cost of retained earnings. And hindi din kasi natin masasabi because there are some indicators and some factors affecting the WACC or the WACC computation. So, we will get on more to the detail with that, but first, let's have the computation for this example. Yan. So, the cost of retained earnings using the CAPM approach, considering ito, may given tayo dito, in the market, the risk-free rate is the 5.60%. The market premium risk is set to be 5%. And then the AFPs or the Allied Food Products beta coefficient is 1.48. So using the formula mentioned a while ago, please try to compute the cost of retained earnings using the CAPM approach. So try nyo guys. Ito yung formula natin. And then, tignan nyo guys, if you will get the same figures na meron tayo dito. Same thing, nice. $13 as well, Jasmine, yes. Same, nice. Okay. So, let's try to, Emma, let's try to compute the cost of retained earnings using the CAPM approach, no? So, we have the risk-free rate of 5.60% plus the 5%, which is the market premium risk, and then times the 1.48 beta coefficient. So, that's 5% times 1.48, you will get the 7.4 plus 5.60. You will get the cost of retained earnings using the CAPM approach, 13%. Yan. Okay? Questions dito, guys? Parang easy sa FMB yung computation. I love it.
Sir, what if yung second naman yung hahanapin? Kunyari wala pa yung RPM.
Ayan, kung wala yung RPM, for example, R sub M yung given, no? So kunyari R sub M
Wait.
Oops. Yan. So for example, ang R sub M natin is set to be 10.60%. and then hindi given ito. Or hindi given si RP sub M, no? So how can you compute for the cost of retained earnings using the CAPM approach? So i-follow niyo lang yung formula pa rin. So that's R sub RF. So that's 5.60% plus the parang mali. Ano masyadong malaki? Ay, tama pala. Ayan. So plus the 10.60%, which is the market risk, minus the 5.60%, which is the risk-free rate, times the beta coefficient. So dapat same yung makuha nyo, guys. Same 13%. Yan. So same lang, guys, no?
Okay po.
So thank you, Cisno, for your question.
Thank you po.
So balik ko lang, guys. Okay. So next we have is the cost of retained earnings, R sub S, but using the second approach we will be using, no? This is called the bond yield plus risk premium approach. So the analysts use this approach if reliable inputs for the CAPM approach are not available. So kapag hindi available yung mga risk-free rate, yung mga market premium risk rate, yung ganon, we will be more on into consideration in using this bond yield plus risk premium approach, or this is the BYPRP approach. But one underlying factor again for BYPRP approach in computation of cost of retained earnings these are just again pure estimates. So pure estimate siya in terms of computation. So yan, the computation or the formula for the BYPRP approach is bond yield plus the risk premium. So again, these are estimates, no? Oops. Yan. So assuming that the allied food products bond yield is set to be 10%, and then the risk premium is set to be 4%. So what is the percentage of the cost of retained earnings using the BYPRP approach? For sure naman, feeling ko naman, di ba guys? Matasabi nyo naman.
Nandiyan na, sir.
So, Diyos ko, pag hindi nyo pa rin ito nasagutan, no? Kunyari sa
Services.
exam, baka ma-stress na ako, no? Pati pag-class ng bond yield plus risk premium. Ayan, so the R sub S for the cost of retained earnings, tama talaga. Parang ayoko ibalik ng tama, parang gusto ko ibalik ng grade 1, no? For addition. Yan. So the cost of retained earnings using the BYPRP approach is 14%. Yan. So what if question, no? What if both are present in calculating the cost of retained earnings? What method or what approach to be used? Yan. So ano sa tingin niyo, guys? Is it the cost of retained earnings using the CAPM approach or the BYPRP approach? Yan, may G, sabi niya CAPM. So all else equal, no? Parang lahat given. Merong CAPM and then the data for BYPRP is also present. So what to be used, no? For estimating the cost of retained earnings. What do you think?
CAPM po.
Yes, Joanna, CAPM, and si Meiji, CAPM, Kelvin, CAPM din. How about the others? CAPM, CAPM din. Walang gusto sa BYPRP? Hoy, mga natutulog dyan. Bakit tulog na kayo, guys?
Sir, nahihilo lang.
Nahihila lang.
Ka na.
Gising pa ako.
Ah!
Yan, CAPM din, sabi nila. Okay, so if all approaches is present, no? If all data are present in calculating the CAPM approach as well as the BYPRP approach, we will use, what do you think, guys? Averaging of the two approach used in calculating the cost of retained earnings. Yan. So, i-average po natin yung dalawa. Ay, ganun, sabi ni Meiji. Ayan. So, we will average the two approaches for estimating the cost of retained earnings. So, paano mag-average, guys? We will just add the two approaches and then divided by 2. So that's 13% plus 14% divided by 2, and there you will get the 13.50% cost of retained earnings. Yan. Nagets, guys? Nagets?
Opo.
Yan. Si Kerwin, opo, nagets daw niya. Okay, sige, pagbibigyan ko si Kent. Let's have a 10-minute break. Let's have a 10-minute break and then please go back. Water break for 10 minutes. Go back at exactly 3 o'clock p.m. so that we can continue discussing kasi medyo mahaba pa. The remaining topics, no? Ano yun, Joanna? Ba't naninigaw? Palasigaw.
Kalahati na po tayo.
Ha?
Nasa kalahati na po tayo. Kalahati na.
Malapit na tayo matapos. 5 slides na lang yata.
Tapos next meeting, wala ng discussion.
Matatapos na pala.
Meron pa.
Ang daming sub, sir.
So,
Inventory, divided
break tayo. Mamaya na tayo mamaya na tayo tumahol, guys.
Sub,
Mamaya na tahol. Later na mga tahol, guys. Ano tayo? Rest muna tayo for 10 minutes. Water break kayo dyan. And kayo bahala kung gusto niyo mag-chismisan muna. Feel free to do so.
Uy, alam mo ba?
Dividend yield plus growth rate, or also called as the discounted cash flow approach or the DCF approach, no? So, the DCF approach is an estimate, the value of capital or investment, which is based on its future cash flow or future growth. So, we have here the computation or the formula rather, for the DCF approach in computing the cost of retained earnings. So we have the D sub 1. This is the expected dividend that the company will pay the next year, divided by the P sub 0. This is the current stock price of the company plus the letter G, or the expected G, or the growth rate as projected by the security analyst. So, since the computation or in computing the cost of retained earnings, these are again pure estimates. So, let's have a specific example, no, for this one. Ayan. So, let's try to compute the cost of retained earnings using the discounted cash flow approach. If the next expected dividend per share by the Allied Food Products is 1.25 per share, the current stock price is 23.06 per share. This stock price came from the common stock price during 2018 of the income statement of Allied Food Products. And then the expected growth rate, which the analysts estimated, is set to be 8.30%. Now, please compute for the cost of retained earnings using the DCF approach. Yan. So, itry nyo guys kung 13.72% din yung makukuha nyo sa sarili ninyo. Go guys. Kelvin, 13.72. Same, Joanna, nice. Same naman. Okay. So, let's try to compute within ourselves, no? So, the D sub 1 or the next expected dividend is 1.25. So, that's 1.25 divided by the stock price, which is the 23.06, which is the current stock price of Allied Food Products for 2018. And then you will get this figure, and then you have to multiply it by 100 so that you can get a percentage for this one. And then after that, after getting this value, you add the 8.30%, which is the estimated expected growth rate of the investment. No? There you will get the 13 point so much, but we will be getting the 2 decimal places. So that's 13.72% cost of retained earnings using the dividend cash flow, or using the discounted cash flow rather approach. Yan. Any questions for this one? So this DCF approach will be used later on sa ating in computation of the cost of new common equity. Yan, makikita natin yung relationship niya later. Okay. So we are done with the computations and the analysis of cost of retained earnings. So meron tayong 3 approaches na ginawa, the CAPM model or the CAPM method. The second one is the BYPRP approach, or the bond yield plus risk premium approach. And then the third one is the discounted cash flow approach. So next, we have here is the cost of new common stock, and we will be denoting that by R sub E. So the companies generally use an investment banker when issuing new common stock, and sometimes when issuing preferred stock or bonds. The banker's fees, so yung fee na kinokolekta ni investment banks, they are called the flotation cost. And then the total cost of capital raised is the investor's required return plus the flotation cost. So kapag nag-i-issue kasi, or there is a plan a company has to issue new common stock, there is a corresponding flotation cost with that, because the company will pay flotation cost to the investment bank. For the investment bank to estimate, to estimate the required rate of return of the project or investment of the company. So there are 2 approaches that is used to account for flotation cost. So the first approach is the additional flotation cost to a project cost, and the second one is by adjusting the cost of capital if there is an increase with the cost of capital. So let's take a look with the first approach, or the additional flotation cost to a project's cost. So initially, capital budgeting projects involve initial cash outlay, followed by a series of cash inflows. So of course, alam naman natin yun na when you are setting a budget, or you are deemed to invest for a long-term asset, ang pinaka-idea nun is you will pay in cash. And then after your if you invested in cash with a specific project, no, it will be followed by a series of cash inflow. So yung return naman nung project na ginawa mo. So one approach in handling flotation cost is found as the sum of flotation costs for debt, preferred, and common stock to finance the project. So this is the nature of this approach, no? When an investment cost is increased, the project's expected rate of return will reduce. So, tignan natin, no? Let's take a look with a specific example for this one. Okay, so considering a one-year project with an initial cost of $100 million, and then after a year, the project is expected to produce an inflow of $115 million. Now, let's try to compute, no, the rate of return for this cost of new common stock. So how can we get the expected rate of return? So that's the cash inflow, or the expected cash inflow rather, divided by the initial cost of the project minus 1. And then times 100%. So please try to compute if you will also get 15%.
Same, sir.
Okay, same, nice. So let's compute manually, no? So that's 115 million dollars, which is your expected inflow, no, after creating the project. Divided by 100, this is your initial cost to finance the project. So that's 1.15 minus 1. There you will get a 0.15, and then you times it with 100 so that you can get a percentage figure. So that there you will get a 15% rate of return for this specific project. Yan. If you pay for your project in cash. Now let's add a twist in terms of this flotation cost, no? Now considering that the company doesn't have money or doesn't have enough cash to finance its new project. Hence, the company will require to raise $100 million of new capital and will incur $2 million of flotation cost. So siguro ito yung sinet, no? Ito yung sinet ni investment banker dito sa sa company na to. Now, the expected rate of return, since there is a $2 million amount of flotation cost, the expected rate of return will reduce to 12.75%. So, ang mangyayari dyan is yung capital mismo, which is 100 million, plus the 2 million of flotation cost, kasama siya dun sa in computing the cost of new common stock. So, 115 divided by 100 plus 2 minus 1, and then you will get the 12.75% cost of new common stock if the approach used is an additional flotation cost to a project. Yan. So, try nyo nga, guys. Okay, so that's 12.75. So, let's try to compute, no? That's 115 divided by 102 minus 1 times 100. There you will get the 12.75%. So, yung 1 is para sa years. No, yung 1 po is a constant number. For us to, parang minus 100% kasi. Yan. So, thank you, Tin, for asking. Constant number po yun. Any question pa dito, guys? For this approach? Laging minus sa 1, sir. Yes, Joanna. Laging minus po sa 1. Okay, so next we have the increase, the cost, by increase the cost of capital approach in computing the cost of new common stock. So, the increase in the cost of capital, adjusting the cost of capital rather than increasing the project investment cost. So if the firm rather plans to continue using capital in the future, wherein this is really what happening in reality, no? Na parang ginagamit lang naman paulit-ulit ni company yung kanyang common stock plus its retained earnings to finance, no, the operations of the company. Hence, adjusting the cost of capital approach is better. So for this approach, we will be using the DCF approach. So yung kanina, when we estimated or when we computed rather the cost of retained earnings, we will be using that again. But in this specific approach wherein there is an increase in the cost of capital, we will be using the flotation cost idea. So if you will take a look with the computation here, computation below, ang pinagkaiba lang niya is that nagkaroon ng 1 minus f dun sa denominator nung fraction nung formula. So the formula is the d sub 1, this is the expected dividend next year over the p sub 0, this is the current stock price times 1 minus flotation cost. Again, the flotation cost is being set by the investment banks, so binibigay po siya. Plus the letter G, or the expected growth rate of the common stock. So let's go back with the allied food product example here. Yan. So dito tayo guys mag-focus. So considering that the investment bank set a 10% flotation cost for the allied food product, so please compute for the cost of new common stock using this formula. Yan. So the point 10 here is the letter F, or the flotation cost, which is set to be 10%, no? So check nyo guys if you can get the same thing, no? Okay, nice. At least you get the same thing, no? So that's 14.32%. So let's try to compute, no? So first, ako ang ginagawa ko para mas mapabilis yung computation ko is inuuna ko yung madaming formula. So I will be first compute for the denominator of the equation. So the P sub 0 is 23.06, which is the stock price, no, of the allied food product, times 1 minus 0.10, so the 10% is the flotation cost, so that's 0.90. And then there you will get a 20.75. Then after nun, I will compute na for the first equation of the equation, no? So the D sub 1 is the 1.25, which is the next expected dividend of allied food products, divided by the 12.75, which is derived from the 23.06 times 0.90, no? Dun sa denominator. So 20.75, and then you will get this value, and then you have to times this one with 100 for you to get the percentage. So that's 6.02 plus 8.30. There you will get 14.32% cost of new common stock if there is an adjustment, no, or increase in capital. Yan. So that's 14.32%. Okay naman, guys?
Opo.
Nice.
Yes, sir.
Kaya pa?
Yes po. Kaya pa po.
Yan, kaya pa.
Kaya pa matulog.
Humihinga pa. Okay. So next one, once we already have the adjusted DCF cost, no? Kasi yung kaninang nakuha nating sagot is called the adjusted DCF cost. Ito. That's the adjusted DCF cost. We need to know the flotation cost adjustment. So the formula for that is adjusted DCF cost minus the pure DCF cost. So, check nyo guys kung parehas tayo na nakuha for this one. So, what I get or the value I get for this one is 0.60%. Yan. So, 14.32 minus 13.72%, which is the pure DCF cost.
Same lang, sir.
Nice. How about the others?
Same lang din po, sir.
And see. So, alam naman ba kung saan nakuha yung 13.72, guys?
Yung sa may cost of retained earnings po, saka yung cost of new common stock.
Yan. Very nice, Joanna. So, that's correct. The 14.32% came from the cost of new common stock, which is the adjusted DCF cost because there is a flotation cost dun sa ating computation of new common stock. Well, the pure DCF cost came from the cost of retained earnings using the DCF approach. Yan. So that's 14.32% minus 13.72%. So we will have a result of 0.60% flotation cost adjustment. Okay? So after you get the flotation cost adjustment, that doesn't end there, no? We need to compute for the cost of external equity. Kasi kanina, when we compute the average of cost of retained earnings, this is the cost of internal equity. Now that we have flotation cost to consider on our computation of cost of equity, we need to find out the cost of external equity. So the computation or the formula for cost of external equity is the R sub S, or this is the cost of retained earnings, plus the flotation cost adjustment. So that's 13.50%. So this is derived from the average of the cost of retained earnings using the approach, using the CAPM approach and the BYPRP approach, plus the flotation cost adjustment, which was derived from adjusted DCF cost minus the pure DCF cost. So, tama ba guys nakuha nyo? 14.10?
Yes, sir.
Yan, very nice. Yan, 14.10%. So, that's it guys for computation of each division or of each component of computation of the WACC. Now that we already have all the figures, no? Ngayon meron na tayo lahat ng figures na meron na tayong lahat ng figures na required for us to compute the WACC. We need to find out, no? The value of the WACC itself. So, I will be skipping the retained earnings breakpoint. So, hindi ko siya sama for today's discussion. So, next meeting ko siya i-discuss. Yan. But we need to compute for the WACC, or the weighted average cost of capital. Yan. So, I can see na dito, sad faces sa EDSA Banks. Hila talaga, sabi ni Meiji. Oops, this is a breakpoint, so wag mo na to. Okay. So sabi natin kanina, no, on the introduction part, there is two ways in computing the weighted average cost of capital. The first one is if the equity comes from the retained earnings or from the internal equity. And then the other one is the WACC if the equity is raised by with equity raised rather by selling new stock, no? So let's try to compute, guys, for the WACC of Allied Food Products. Yan. So let's substitute using the formula we have here, no? So that's W sub D times R sub D times 1 minus T plus W sub P times R sub P plus W sub C times R sub S. So try nyo, guys. If you will also get the same figure I have here for for this one. Same lang, sabi ni Joanny. Okay, Bern also get the same thing or same figure rather, no?
Same lang, sir.
And same din with Kelvin. Nice, very nice. Same with Meiji as well and Luis. Mary pala dapat.
Same lang, sir.
Same jumps. Okay. So yeah, so let's discuss, no? So the W sub D, this is the weight, no, or the target weight for debt, which is na-identify na natin kanina using this one, no? So this is the target weight, so that's 45%, sabi nila. Sabi ni Allied Food Product. And then the R sub D times 1 minus P, or this is the after-tax cost of debt, no? Which we have computed a while ago, no? Ang sabi natin is the cost of debt is set to be 6%. So i-substitute mo lang siya diyan. And then the W sub P, or the target weight for the preferred stock, is set to be 2% because yun yung target ni Allied Food Products based dito sa kanilang capital structure. And then yung R sub P, or the cost of the preferred stock na na-compute natin kanina is 10.26%. So ito siya. Plus the W sub C, or the weight, or the estimated target weight for of equity, na ang sabi ni Allied Food Product is set to be 53%. So that's 0.53 times the R sub S. Since ang ginagamit natin dito is the internal equity, so this is the average of the cost of retained earnings using the two approaches. So that's 13.50%. So multiplication wise, so that's 0.45 times 6, so that's 2.70. 0.02 times 10.26, that's 0.21, so 2 decimal. And then 0.53 times 13.50, you have 7.16. And then you have to add everything. So that's 2.70 plus 0.21 plus 7.16. You will get a weighted average cost of capital 10.07% if the equity comes from the internal equity or the retained earnings. Yan. So what does it tell us, no? So ang sinasabi lang yan is that every dollar or every peso na i-invest ni company sa kanyang long-term asset, the cost of capital is 10.07%. So kapag kinonvert natin siya into peso or into dollar, that is 10 cents, no? 10 cents per peso or per dollar. So yun yung ano niya, yung cost of capital in investing into a long-term asset of the company in the future. Yan. And then last one, the weighted average cost of capital that was derived from the sale of new stock. Same lang naman yung computation for this one. It's just that ang gagamitin mong R sub S for this one is 14.10%, which is derived from the cost of external equity. Kasi there is an adjustment, no, in terms of flotation cost for the sale of new stock. So, ganun pa din, ang same computations, yung last part lang yung nagkaiba, and then you will get the 10.38% cost of capital with equity raised by selling new stock. So, yun lang naman yun, guys. Nagets? Any
Sir, may
questions
tanong
for this
po
one?
ako.
Yes, Nelwin?
Yung doon po sa target rate, paano po nakuha yung value nila?
Yon. So, as mentioned also kanina, no, the target weight here is derived from the financial forecast of Allied Food Products. Meaning, ano na siya, napag-decide na siya in over the discussion of the member of the board or the board of directors na ito yung mga target weight nila for next year, capital structuring. Yan.
So, bali po sir, given na po siya, hindi na po namin siya i-compute.
Yes, that's correct, Melvin.
Thank you po.
Because ito, kinocompute to when you are about to discuss financial forecast. Yan. Specifically, capital structuring. I'm not sure if madadaanan natin siya.
Sana
Kung
wag
kasama
na.
siya dun
Charot.
Kung madadaanan natin siya dun sa last part ng topic. Yan. Wag na financial forecast. Na-try niyo na ba yon mag-financial forecast sa iba yung financial management topic?
Di pa po.
Financial management, hindi pa. Pero dapat sa FM, ano na yun diniscuss na. Or baka sa ano siya, special topics with financial management. Okay, so if you don't have any more questions, so let's proceed. Yeah, so this is the last slide for this topic. No? Yan. So, as mentioned a while ago, ang bilis natin natapos, 3:30 pa lang. Ay, salamat sa bag. Kanina para kulang yung oras namin. Yan. So, as mentioned a while ago, there are factors affecting the weighted average cost of capital. Ginagalingan ni Sir palagi. Ayan. So, there are, we will be categorizing it into two factors, the external factor and the internal factors. So, the external factors are said to be the uncontrollable factors, wherein hindi siya nakokontrol, no? And then the internal factors are the controllable factors, of course. In terms of computing, no, or in terms of the effect to the weighted average cost of capital. So let's have first the external factor or the uncontrollable factors affecting the WACC. The first one is interest ano nang pinagsama na. The interest rate in the economy. So, of course, this is uncontrollable because the interest rate is market-driven. So, ang nagsiset nito madalas is si central bank ng isang nation. Hence, walang control si company over that one. So, if interest rates in the economy increases, pagkat tumaas yung interest rate ng isang economy, what will happen to the cost of debt? What will happen? Will it increase or will it decrease? If the interest rate increases in the economy, what will happen to the cost of debt? Anyone? Tataas din. Sabi ni Ethel, will increase as well. How about the others?
Pa-hold po ng tanong.
Okay, the question, if the interest rates in the economy increases, what will happen to the cost of debt? And we all know that the cost of debt is a component in calculating the cost of capital. So what will happen? Will it increase or will it decrease? No backup for Sisno? Sir, last pa ulit ng tanong. Okay. If the interest rate in the economy increases, tumaas, nagkaroon ng rise, no? With the interest rates in the economy. So what will happen to the cost of debt of the company? Will it increase or will it decrease?
Increase, sir.
Okay, increase. Andre increase. Christine increase. Mary increase.
Increase, sir.
Kelvin increase. Jessica increase, no? Okay, so that's correct. When the interest rates, if there is a rise, no, in terms of interest rates in the economy, the cost of debt will also increase. Kasi syempre, tataas din yung interest mo dun sa mga utang mo sa mga lenders. The second one is the general level of stock prices. So, ngayon, what will happen naman if the stock prices decline? What will happen to the cost of equity? So, will it increase or will it decrease kapag nag-decline yung stock prices? What will happen kapag nagkaroon ng decrease or decline in stock prices? So, tataas ba yung cost of equity or bababa yung cost of equity? What will happen? Magtatawag ako.
Decrease po, sir. Siguro.
Okay, decrease, sabi ni Joanna. Meiji, tataas. Maridel, increase. Ira will increase.
Increase po ata rin, sir.
Increase
Jones,
po.
increase. Melvin, decrease. Team, decrease. Okay, so madami, medyo half tayo, no, in terms of this one. So, when there is a decline in the general level of stock prices, the cost of equity will increase. Yan, kasi kapag pagka bumaba yung stock price ng isang company, magkakaroon siya ng effect in terms of cost of equity. Pwedeng ang mangyari is that they will add more, no? They will add more onto the selling of shares. Yon, sabi ni Maridel. So, yon, kapag nagkaroon ng decrease or decline with the stock prices, it will increase, no, the cost of equity. The next one, uncontrollable factor is the tax rate, because of course the tax rate is government imposition. So si government yung nag-i-impose nito, and the company doesn't have control over that. So because tax rates are used in the calculation of the component cost of debt, so there will be a direct effect, or a direct effect rather, no? Direct effect with the cost of debt as well. So kunyari sinabi ni government is 30% na lang yung tax rate, and then you will incur a tax savings of 30% rather than the 40%. So yun yung mga factors, uncontrollable factors affecting the WACC. And the next one, we have the controllable factors. So the first one is changes in capital structure. So kanina, di ba, we mentioned that there is, or the target came from the target based on the financial forecast of the company. So the controllable factor here is that the company can change its capital structure. Kung baga, pwede nila mag 0% debt, sabihin nila na wag nilang umutang, para kapag nagkaroon ng increase with the interest rate in the economy, hindi sila mamroblema. Or pwedeng sabihin nila na wag na tayo magkumuha ng mga investors, mag-focus na lang tayo sa pangungutang. So that if there is a movement in the level of stock prices, hindi tayo affected on that part. But of course, sabi ko nga, di ba, the mixture of the debt and equity financing is very important in a company. And it really depends on the strategic management of the financial division or the financial department in a company when it terms in the decision making in the capital structuring of the company. And then the second one is the second controllable factor is that changing its dividend payout ratio. If they change their dividend payout ratio or their dividend policy, there will also be an effect with the calculation of WACC because, di ba parang kanina, we mentioned that there is an estimation of the next dividend payout or the next year dividend policy payout for a certain company. So, kapag they change that, kunyari sinabi nila pababain na lang natin for us to get a lower cost of capital, then they can do that. However, what will happen kapag ganun yung ginawa nila is that they will they may lose or they might lose investors on that part. Kasi kapag ginawa nilang pinababa nila yung dividend policy, pwedeng yung mga investors, they can pull out their investment in that certain company. And then they just look for another company that pays a higher dividend compared to the previous company that they have invested on. And then the third one, the third controllable factor is altering capital budgeting decision rules. So ito yung sinasabi ko kanina na on how the decision making of a company, ano yung gagawin nila in terms of capital budgeting decisions. So are they be using the borrowings to finance or to have a long-term investment, or magka-cash base na lang sila? So yung mga ganung mixture of in terms of cost of capital, that is very important decisions that the company is making in terms of policy and management perspective as well. So yun guys, some of the that's it for the investment on long-term assets, most specifically the capital budgeting decisions using the computation or using or getting the cost of capital of the company. Any questions?
Wala po.
Walay po.
Wala po.
Very clear.
Opo.
It's so nice na sumasagot pa rin kayo until the end, no? Kasi kanina parang wala na ako kausap.
Ganyan pa rin.
Yan.
Sir,
So,
na-exam,
yes.
ganyan lang din yung volume mo, sir, ah. Huwag mo nahirapan, ang daming kakampitin.
Siyempre,
Okay,
hindi.
sobrang dami, no? Sobrang dami nung pero alam niyo naman, hindi ako masyadong nagpapaano, ang tawag dito, yung more on to the computation part. Parang I am more on, I am much interested, no? With the analysis part of the,
Scam.
the computation.
Scam.
Scamas.
Yan. Sige, maniwala kayo. Natatakot na si Paul mo kasi kapag tinitrigger niya ako ng ganito, the more na hinihirapan ko yung exams or yung quizzes.
Tahol-tahol.
Ayan. Okay.
Sir, kita ko na si Lord.
Ano daw? Okay. So if you don't have any more questions, so these are my reminders, no? For next meeting. So the first half of next meeting will be quiz number 2. So the quiz number 2, the quiz number 2 component is the financial ratios, the cash conversion cycle, and the cost of capital. So yun yung yung components natin for next meeting. Don't worry guys, you can list down all the formulas for for the financial ratios, for the cash conversion cycle, and for the cost of capital. Yan, you can write the formulas for that. Yan. So
Sir, ilang
the
items po yun? Char.
the number of items for next meeting will be siguro mga 60 to 80 items or 60 to 80 points rather, no? For for ay midterms na, sabi ni Maridel.
Comatos.
Nakakaiyak naman, sir.
Sir, pwede makomatos?
Pwede mo. Yan.
Next week, sir, next meeting.
Yes, next meeting. That's
Agad?
1.5 hour ang ibibigay ko sa inyong
Tulong yan, sir.
Sir, 2 hours.
Sir, 2 hours na po.
Iano ko
Please.
naman siya, kumbaga yung 60 to 80 points naman is not the number of items itself. So pwedeng mga 30 items lang pero 2 points each, 3 points each ganun. So it depends no on the complexity of the problem being asked.
Sir, computation lang po yun.
I'm not sure yet, pero meron ang sure ko na ipapagawa is ang sure na magagawa ang sure na meron is merong analysis. Tapos merong part na analysis, tapos merong computation. Hindi na ako magpapa-theories, guys, no? Para i-reserve ko kasi lahat ng theories ko for i-reserve ko yung lahat ng theories ko for the midterm exam. Kasi sobrang konti ng theories eh. So, mas maganda kung yung theories nasa midterm exam. Yes, Ira, lahat po ng ratios kasama. From the liquidity, from the asset management, debt management, and market ratio. Yan, kasama po lahat, pati profitability. St. Peter na ba? Yan. So guys, please, do well next week. Oy, Alin, ba't ka nandito? Ayan, so, that will be for next week, no? And then the second part of the meeting next week will be investment on securities. So magkakaroon tayo ng introduction for investment on securities. So please mag-advance reading din kayo about investment on securities. Yan, para katulad ngayon, I love the discussion kasi feeling ko nagbasa kayo guys and nakakasunod kayo dun sa nakakasunod kayo dun sa topic natin ngayon. Alin, ka dito kasi maririnig mo yung comment ko sa FMB. Ayan. Kasi sabi ko kanina, Alin, dun sa FMA, after ng discussion, parang gusto na lang mag-leave ng lahat. Wala na sumasagot, no? Ayan. So, wala na kayong question, guys. So, if you don't have any more questions, so have a great weekend. You enjoy the weekend. Relax, no?
Ba't ganyan di finisis to?
Ba't ano di finisis, no?
May interview po eh. Nag-i-interview sila ni Michelle.
Yan. So if you don't have any more questions, guys, thank you so much for today. And I'll see you next week, FMB, for financial analysis and reporting.